Capital Allocators: How the World's Elite Money Managers Lead and Invest, by Ted Seides. This is a book summary. Imagine sitting in a room with the world's elite money managers, the folks who control billions and decide where to invest. Picture this: a sleek boardroom high above Manhattan, the city lights glittering outside, and at the center of it all, a group of brilliant minds debating where to place $1 billion bet. Now, what if you could get inside their heads, understand their strategies, and learn the secrets that separate the good from the truly great? Well, today we're diving into just that, with a book that's like a backstage pass to the world of high-stakes investing, Capital Allocators by Ted Seides. Ted Seides isn't just an author, he's a seasoned investor who spent decades navigating the world of institutional finance. He's interviewed the best of the best through his popular podcast, Capital Allocators, which has been downloaded millions of times by investors hungry for an edge. But this book isn't just a collection of interviews, it's a treasure trove of insights distilled from hundreds of hours of conversations with the world's top CIOs and asset managers. Each chapter is packed with real-world lessons and practical frameworks designed to help you think, decide, and invest like a pro. So, grab your coffee, hit that like button, and let's break down the key lessons from the world's top money managers. At its core, investing is about making decisions constantly. Humans are hardwired to be bad at it. We're emotional, biased, and often way too overconfident. In Capital Allocators, Seides pulls back the curtain on how top investors counteract these flaws with a blend of discipline, humility, and process. He doesn't just talk about making decisions, he dissects them, revealing how the best investors navigate uncertainty and risk with surgical precision. One story that stands out is Seides' own wager against Warren Buffett, the oracle of Omaha himself. In 2007, Ted bet that a portfolio of hedge funds could beat the S&P 500 over a decade. Spoiler alert, he lost. But what makes this story powerful isn't the outcome, it's the lessons he learned about decision-making. Seides reflects on how even a well-informed, rational decision can go south when reality doesn't cooperate. And instead of brushing off the loss, he embraced it as a masterclass in humility and process improvement. That's a key lesson here. Outcomes aren't always a reflection of decision quality. In fact, one powerful takeaway from the book is to conduct postmortems on every major decision, whether it wins or loses. Top investors use these reviews not to assign blame, but to extract lessons. Imagine sitting down after every major investment, not to pat yourself on the back or beat yourself up, but to ask, what did I miss? What can I do better next time? That's how the pros transform mistakes into gold mines of insight. This mindset reminded me of something Annie Duke, a former poker champion, shared with Ted on the podcast. She talks about how every decision is a bet on what you believe about the future. And just like in poker, even a smart bet can lose if the cards don't fall your way. Seides builds on this by laying out a systematic approach to decision-making, focusing on the quality of the process rather than the randomness of outcomes. And it's not just about avoiding mistakes, it's about turning them into fuel for improvement. The best investors aren't afraid to revisit decisions, even the painful ones. They lean on systems, checklists, and a brutal honesty about their own biases. They question everything, from their assumptions about market trends to the incentives driving their managers. This relentless focus on process over outcomes is what sets them apart. And that brings us to one of the most actionable tips in the book: decision journals. Seides explains how top CIOs keep detailed logs of their decisions, what they believed, why they believed it, and what they expected to happen. Then months or even years later, they go back to see what they got right, what they missed, and most importantly, why. It's like having a cheat code for leveling up your decision-making skills. So, if you've ever found yourself second-guessing an investment or regretting a missed opportunity, this chapter alone is worth the price of admission. Because at the end of the day, investing isn't about being right every time. It's about being right enough of the time and learning from the times you're not. That's just the start. If you think the decision-making playbook is powerful, wait till you hear what Seides has to say about leadership, interviewing, and navigating the chaos of modern markets. So, stick around, this is about to get really interesting. Interviewing isn't just for journalists. For elite investors, it's the secret weapon. In Capital Allocators, Ted Seides reveals how the best chief investment officers, CIOs, conduct deep dive interviews with fund managers. But here's the twist, they're not there to grill them or catch them off guard. In fact, the real art of interviewing is about making the interviewee feel comfortable enough to reveal their true thought process, their motivations, their blind spots, and, most importantly, their decision-making frameworks. One of the most powerful techniques these CIOs use is what Seides calls open-ended questioning. Instead of firing off rapid questions like a prosecutor in a courtroom, they ask thoughtful, expansive questions. Imagine sitting across from a fund manager and asking, "What's the biggest mistake you've learned from?" Or "What do you know now that you wish you'd known 10 years ago?" The goal here isn't just information, it's understanding the person behind the portfolio, the way they think, and whether they have the humility and self-awareness to evolve. And it's not just about the questions, it's about how you listen. Seides talks about active listening, the kind where you're not just waiting for your turn to talk, but really absorbing what the other person is saying. The best CIOs don't interrupt, they nod, they take notes, and they lean in, both physically and mentally. They mirror back what they've heard to make sure they've got it right. And sometimes, the most revealing answers come when they say nothing at all, just letting the silence do the work. As the saying goes, silence is golden. Seides even shares a story about a top allocator who decided against investing with a fund manager, not because of the numbers, but because of a small, seemingly trivial moment. During a golf game, the manager snapped at a caddy, showing a side of his character that spreadsheets and pitch decks could never reveal. That's the art of interviewing, spotting the tells, the subtle signs of integrity or lack thereof that numbers can't show. And then there's the concept of fishing for red flags. Top allocators know that no fund manager is going to openly admit their flaws, so they ask indirect questions to reveal them. For instance, instead of bluntly asking about risks, they might say, "What keeps you up at night?" Or they'll ask, "What would a critic say about your strategy?" This approach not only disarms the interviewee, but also prompts more candid responses. One of my favorite parts of the book is when Seides describes the importance of setting the right tone. Successful interviews don't happen by accident, they're engineered. The best CIOs take meetings outside the usual boardroom setting, over lunch, at a ball game, or even a walk in the park. Why? Because people reveal more when they're relaxed. As Seides puts it, the physical setting can either open up or shut down the flow of honest conversation. But perhaps the most surprising lesson? The smartest investors don't just listen for what's said, they listen for what isn't. They pay attention to the pauses, the hesitations, the way a manager deflects or dodges a tricky question. Sometimes, what a manager won't say is the most important insight of all. That's the difference between a good interview and a great one. In Capital Allocators, Seides doesn't pull punches. While passive investing has its merits, like low fees and broad diversification, he argues that active management isn't dead, it's just misunderstood. The trick is finding managers who don't just pick stocks but allocate capital strategically across different assets, markets, and geographies. It's less about beating the market and more about building a resilient portfolio. Seides makes the case that passive investing is like driving with cruise control. It's easy and safe in clear conditions, but leaves you vulnerable when the road gets rough. Active management, on the other hand, is more like having a rally car driver at the wheel, taking sharp turns, adapting to unexpected obstacles, and seeking out opportunities in places most investors ignore. Negotiation is another superpower of top allocators. In Capital Allocators, Ted Seides shares stories of investors who've mastered the art of aligning incentives, not just to close deals, but to build long-term partnerships that thrive. For these pros, negotiation isn't a zero-sum game. It's about finding common ground, aligning interests, and crafting win-win scenarios. And the secret sauce? Understanding what the other side truly needs. Seides describes a situation where a fund manager was dead set on a higher fee structure, and the CIO at the table was just about to walk away. But instead of making ultimatums, the CIO paused and asked a simple question. Why does this fee matter so much to you? The answer wasn't what he expected. The manager wasn't just being greedy, his team had invested heavily in data analytics and research, and the higher fee was about covering those costs to keep delivering top-notch results. Understanding this shifted the entire conversation. Instead of haggling over percentages, they restructured the deal to include performance-based incentives that aligned both sides. The result? A partnership that lasted over a decade. Seides also reveals how the best allocators prepare for negotiations, by doing their homework. They don't just show up with a list of demands, they research the other party's business model, constraints, and even their personal motivations. One allocator even studied the body language of the CEO he was negotiating with, figuring out that whenever the CEO leaned back and crossed his arms, it was a sign he was digging in his heels. That small insight led to a breakthrough moment when the allocator switched tactics, steering the conversation back to shared goals rather than pushing for concessions. Another powerful tactic Seides highlights is the art of framing. How you present a deal can make all the difference. For instance, rather than focusing on how much a fund manager was charging, one CIO reframed the conversation around net returns after fees. By shifting the focus to outcomes instead of costs, he was able to make the fee seem like a small price to pay for the potential upside. It's like focusing on the final score of a game rather than just the plays that got you there. But perhaps the most counterintuitive lesson? Sometimes, walking away is the best move. In one story, a CIO was negotiating with a hedge fund that refused to budge on a key term. Instead of pushing harder, the CIO ended the meeting, politely but firmly, saying they'd have to pass. A week later, the fund manager called back, ready to renegotiate. As Seides puts it, the willingness to walk away isn't a sign of weakness, it's a sign of strength. Seides also talks about the power of clear, consistent communication, especially during rough patches. During the 2008 financial crisis, one CIO hosted weekly all-hands calls with complete transparency about what was happening in the markets and how it affected the portfolio. There was no sugarcoating, no corporate jargon, just straight talk. That openness didn't just keep the team calm, it built a level of trust that carried them through the worst of the storm. And then there's the importance of authenticity. Seides makes it clear. Teams can spot a fake a mile away. The best leaders are the ones who own their mistakes, admit what they don't know, and share the spotlight when things go right. As one CIO put it, leadership isn't about being the smartest person in the room, it's about making sure the smartest people want to stay in the room. So, what's the bottom line? Great leaders aren't just masters of strategy, they're masters of people. They define a clear vision, set high standards, and then get out of the way, trusting their teams to deliver. That's how you lead a billion-dollar fund, or any team for that matter, to success. One of the most powerful stories Seides shares is about a CIO who spent the first hour of every morning reading, not the news, but research papers, books, and case studies that challenged his views. To him, that wasn't a luxury. It was an investment. Over time, those extra 300 hours a year of learning compounded into a deeper understanding of markets, strategies, and human behavior. It's like the financial equivalent of sharpening an axe before you cut down a tree. And it's not just about reading more, it's about reading smarter. Seides highlights how the best investors create what he calls a personal board of directors, a network of mentors, peers, and even rivals who challenge their thinking and push them to level up. But continuous improvement isn't just about absorbing knowledge, it's about applying it. The best investors build what Seides calls feedback loops into their processes. After every major decision, they conduct postmortems, reviewing what went right, what went wrong, and what they could do better next time. They don't just do this for the decisions that went south. Even when they win big, they dig in to understand if it was skill or just luck. As one CIO put it, success can be a terrible teacher if you don't question it. And it's not just about individual growth, it's about institutionalizing that mindset. Seides shares the story of an investment firm that implemented red team reviews, where a group's sole job was to poke holes in the main team's strategies. By embracing dissent and encouraging pushback, they uncovered risks and flaws that might have been missed. As the saying goes, steel sharpens steel. In investing, stubbornness is expensive. Adaptation pays. And if there's one thing Ted Seides drives home, it's that investing isn't about luck. It's about playing the right game with the right mindset. It's about making better decisions, managing risk like a pro, and learning from every mistake along the way. As one CIO put it, the best investors aren't the ones who never get knocked down. They're the ones who get up faster every time they do. So, if you're serious about leveling up your investing game, grab a copy of Capital Allocators, start building your own decision journal, and keep tuning in for more insights. Make sure to hit subscribe, drop a like if you found this helpful, and share it with someone who needs to hear this. Until next time, keep learning, keep investing, and keep playing the long game.